In the 1980s, property values in Tokyo were higher than the entire United States. But just a few years later, Japanese banks collapsed and millions of people lost their jobs. Why should we understand what happened in Japan? Because this is the story of the fall of an economic superpower, a lesson that still matters today. In this video, we will uncover how Japan's economic bubble burst, how its people were trapped in the lost decade, and why this collapse continues to haunt Japan's global economic standing. About 140,000 were killed in Hiroshima, and 70,000 in Nagasaki when atomic bombs were dropped during World War II. After that, Japan's economy immediately collapsed, inflation exceeded 100%, and leaders had to introduce major reforms to rebuild the country. The United States took the opportunity to control Japan's administration and introduced a democratic system until a peace treaty was signed on April 28, 1952, marking Japan's independence. In 1945, Japan's gross domestic product, GDP, fell by 50%, the worst decline in its economic history. Then Japan's economy grew rapidly from 1947 until the end of the Cold War in 1991. This period became known as Japan's economic miracle. By 1956, Japan's GDP had already recovered to its pre-war level in 1940, and then surged further to compete with two major industrial powers, Britain and the United States. The main factor behind Japan's success was the restructuring of its workforce, moving from less productive agricultural sectors to manufacturing industries that offered higher per capita income. Around the 1980s, Japan's economy entered what was called the bubble economy, lasting until the early 1990s. By 1991, Japan's GDP was equal to 120% of Britain's GDP, or 85% of the US GDP. But the Japanese economy then faced a prolonged period of stagnation and deflation. From the 1990s into the 2000s, Japan's average economic growth was only around 1%, and this era became known as Japan's lost decades. How the Japanese lived during the bubble economy. In the 1980s, the value of real estate and the stock market in Japan skyrocketed, creating a bubble economy driven by speculation and rapid growth. Both land prices and stock values in Japan surged to record highs. In 1980, the Nikkei index stood at 6,867 points, and by the end of the decade, it had soared to 38,915 points. Due to rampant speculation, the stock market recorded extraordinary gains every year during the 1980s. At its peak, Japanese stocks accounted for 45% of the global market, even surpassing the US stock market. Almost every Japanese citizen traded in stocks, doubling their money and making maximum profits. By comparison, today, Nikkei's market value is about 4.3 trillion US dollars, only 6% of the global market, and still smaller than just two US companies, Apple and Microsoft, which together are worth 5.8 trillion USD. Property values in Tokyo and other cities rose sharply, to the point where some areas of Tokyo were valued higher than all US real estate combined. In fact, a parking space in Tokyo was more expensive than Central Park in New York. The Tokyo Imperial Palace was valued higher than Canada's entire GDP. With such overflowing wealth, everyone wanted membership in exclusive golf clubs, priced at 500 million yen, or 3.5 million US dollars in 1989. Many citizens could afford weekend trips from Tokyo to Hokkaido, 831 kilometers away, just to enjoy a bowl of ramen. The yen was very strong, even higher than the US dollar, allowing Japanese tourists abroad to enjoy greater purchasing power. At that time, it was as if all of Japan was living in a never-ending party. Profits from real estate and stock sales in 1987 exceeded 3.4 trillion USD, about 40% of annual GDP. Banks offered easy loans to business owners to build new offices and to individuals to buy property. Because of this prosperity and Japan's rapid industrial growth, writers in Hollywood films portrayed Japan as the future global leader. But in reality, many people made reckless decisions, convinced that prosperity would last forever, and that nothing bad could happen. Yet in truth, they were living inside a bubble that could burst at any time. The bubble bursts. The real estate bubble caused debts to pile up, with many citizens even borrowing from non-bank institutions. Such loans rose from 22 trillion yen in 1985 to 80 trillion yen by the end of 1989. The bubble finally burst in the early 1990s, marking the start of Japan's lost decade. Asset values collapsed, with the Nikkei stock index plunging more than 60% by 1992. Property prices also crashed, putting huge pressure on borrowers and lenders. Major banks such as Hokkaido Takushoku Bank, the Long-Term Credit Bank of Japan, and Nippon Credit Bank collapsed. Many business owners could no longer afford rent. Banks faced a crisis as financial institutions were burdened with massive non-performing loans. Consumers stopped spending, deepening the recession. The 1990 stock market crash wiped out billions of dollars in wealth and drove many companies into bankruptcy. Despite repeated attempts to stimulate the economy, the stock market never recovered, and the Nikkei remained far below its 1980s peak. Japan's corporate culture, which had long seen employees as assets never to be dismissed, faced hard choices. By the late 1990s, many companies were forced to restructure, with Sony cutting 17,000 jobs, Hitachi 20,000, Toshiba 19,000, Fujitsu 16,000, and Panasonic 3,000. Panasonic's layoffs were especially shocking since its founder was famous as the father of lifetime employment. University graduates were forced to continue studying because there were simply no jobs available. New hires were mostly on contract or part-time positions. Over time, incomes of both households and the government shrank. Japan's GDP growth, which averaged 5.8% annually from 1988 to 1990, fell to 3.5% in 1991, 0.9% in 1992, and minus 0.46% in 1993. Another critical issue during this period was deflation. Unlike inflation, where prices rise, deflation meant prices of goods and services remained stagnant or fell. Deflation occurs when inflation drops below 0%, leading to higher unemployment, poverty, and reduced investment. Japan's central bank eventually adopted an extraordinary monetary policy, setting interest rates below zero in January 2016 to stimulate the economy and fight deflation. The goal was to encourage banks and financial institutions to lend more to businesses and consumers. Japan's decline in the global economy. Japan fell to the world's fourth largest economy in 2023, overtaken by Germany. This was because Japan's GDP shrank at an annual rate of 0.4% in the final quarter of 2023, as households and businesses cut spending for 3 consecutive quarters. Japan had once been the world's second largest economy, behind the US, until 2010 when China overtook it. By 2023, Japan's GDP stood at 4.2 trillion USD, compared to Germany's 4.4 trillion USD. The depreciation of the yen also contributed to Japan's fall to fourth place, since GDP is measured in US dollars. In addition, Japan's economic slowdown was worsened by its declining population and shrinking productivity. The birth rate fell, the population aged, and recent data shows Japan steadily losing global influence. Many businesses prefer to invest abroad rather than in an aging country with low productivity. Japan experienced a massive bubble in both real estate and the stock market simultaneously. When the bubble burst and Japan fell into the lost decade, it still remained the world's largest creditor nation, with external assets worth 3 trillion US dollars in 2023. The Japanese people, guided by Buddhist teachings such as "the only constant in life is change," have shown resilience, adapting to both social and economic transformations in the hope of building a better future.